what exactly can we expect overall in terms of a U.S. response? And will it be something that really drags us perhaps into a further military conflict in Iran?
Well, I think there's hope that there's less of a U.S. response, especially with all the rhetoric over the weekend. I think if you go back at where this skirmish began, it began with the U.S. pulling out of the Iran deal about 2 years ago. So the airstrike on Qasem Soleimani certainly was a terrible person. However, it's clearly created quite a bit of nationalist pride in Iran. If you see the millions that have turned out for his funeral today in Tehran, certainly this is not helping the U.S.'s case in the Middle East at all. And all this does is create greater uncertainty, particularly for the allies in the EU and UK who have already struggled to back some of the actions that the U.S. has taken with respect to Iran. So this is creating a bit of a even further unilateral situation with the way the U.S. is treating Iran, where I think you're seeing a lot of allies cautiously watch and hope that this de-escalates quickly and that there are no more moves right now.
So David, an interesting point brought up by both Dan and Hadley in the last segment, this idea that there could be a power vacuum developing inside of Iraq. The U.S. has taken painstaking efforts to stabilize the region. Does this mean that energy markets are in a new paradigm for higher prices for longer?
I think it's too early to say if we're in a new paradigm of higher prices. Certainly we've seen prices tick above $70 a barrel in early trade this morning, though they've since come off a little bit. I think it's worth bearing in mind that there is a huge amount of uncertainty. Now, that's going to scare some shorts out of the market and see prices, generally tick higher on average. And, we've come up about 5% in the last few days. But in terms of saying we're moving to this new range, that we're going to be above 70 because of heightened risks for the rest of the year, I don't think many people are yet making that bet. If you look at the oil forward curve, looking at where prices are 6 months or 12 months down the line, they have not responded as dramatically yet. People still seem to be betting that, look, if you come with $70 crude oil, there is going to be a reaction on the supply side. We've already had Saudi Arabia and the United Arab Emirates indicate that they could step in to help, switching from cutting production to increasing production if they need to, or potentially at the request of the United States, where they're clearly closely allied with. At the same time, if you've got $70 crude oil, this could throw a lifeline to the US shale industry, which has started to appear to slow down, which has been causing some problems, and it's why oil prices were already rising in part prior to these tensions picking up in the last few days. But if you have $70 crude oil basis Brent or 65 basis WTI, that is going to prove a help. It might not cure all the ills of the US shale industry, which, as I say, was looking like the rapid production growth was going to slow down, but it will help. And if with the higher prices come higher supply from the US, so I don't think anyone's getting bulled up yet and really thinking, right, this is it, we're going to 100. It doesn't yet feel that way. Of course, if we see another event like we did in September with the attacks in Saudi Arabia, all bets might be off. But for now, I don't think it's enough to say that we're moving into a new range.
Gotcha. Okay, so Dan, let's talk about the corporate implications. The direct impact could be on oil companies for sure. How do other countries and companies navigate this kind of environment where U.S. sanctions could now be furthering against Iran and maybe even going against Iraq now?
Well, and one thing, the Iraq bit, who among us isn't cranky when we come back from winter vacation to threaten sanctions on Iraq for what's happened, where there is still some uncertainty of what could happen next with the U.S. being expelled is one thing. It is important to note there's a glimmer of hope here with Iran. They didn't actually say they're going to no longer comply with the Iran deal. What they did say is they're going to abandon enrichment restrictions. They still are very much allowing inspectors in, and you could argue that the meat of the substance of the deal is dead, but there is still a glimmer of hope that they may come back to the table and discuss. For foreign companies, for global companies, they've largely been iced out of the Iranian market for years anyway. The Iran deal was supposed to bring about nuclear relief or nuclear prohibitions in exchange for certain relief in business that would be enabled. That never really happened. Global banks were terrified of moving into the market, mostly because they've been penalized by U.S. regulators over the years. So a lot of the large industrial deals never necessarily took off like they were announced. There's not a lot of companies that are really impacted outside of oil at this point. I think there's still concern of what this could mean next, but the net impact of the market outside of oil is it doesn't make a big difference because most companies had already abandoned Iran for fear of U.S. regulatory retaliation.